The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Dan Tapiero, the global macro investor, entrepreneur, and business leader. You are the CEO of 10T Holdings, a growth equity firm with $1.2 billion under management that has built a diversified portfolio of private companies which are enabling the digital asset ecosystem. You have 30 years of experience in macro investing, trading, research, and economics, and have worked as a portfolio manager with the world's most respected investors, including Stan Druckenmiller, Stephen Cohen, and Lord Rothschild. You previously described Bitcoin and blockchain technology as historic inventions akin to the birth of the combustion engine that will transform our world. Recently, you've said that your initial estimation of a $10 trillion market cap for crypto was conservative and that it could be double that, or $20 trillion in the next decade. You're now in the process of raising an additional $1 billion for your new fund, One Roundtable Partners, in order to invest in mid to late stage digital asset ecosystem companies. Dan, welcome back to London Real.
Hi, Brian. Great to see you. Again, it was nice seeing you also in Paris. That was fun.
Yeah, it was great to catch up. And look, I can't wait to dive into this. Super excited to talk to you. Before we get started, just want to say if anyone's interested in learning more about your new fund, One Roundtable Partners, they can go to londonreal.tv/Dan for more information. Here at London Real, we will be investing in One Roundtable Partners via London Real Ventures, and you can learn more about us at londonreal.ventures. Dan, we caught up in Paris, and I got to say, you were glowing in Paris. Like, you were on your game. You told me you just deployed over $100 million of capital in Q4 into 7 different businesses, you know, while everybody else was pretty much licking their wounds. And I just want to say, like, how were you able to do this when everyone else was, you know, doing the opposite in Q4 of last year?
Well, I don't know that everyone else was doing the opposite, but there was a lot of panic, as you know, after the FTX fraud. And, you know, I was talking yesterday with one of our LPs, who's an old-time commodities trader, and he noted the same thing I did, which was that, again, on the announcement of that fraud, the Ethereum price couldn't go down and make a new low. The Bitcoin price went down, made a new low, but then sort of popped right back up. And, you know, if you've been trading in the markets a long time, like we have, you know, those are telltale signs for a market that's sold out. And what that just means is, if a market can't go down and make a new low on what is probably the worst news that you could possibly imagine, it just tells you the selling in the bear phase, it's either petering out or it's completely done. And he took the same signal as I did, watching the market very carefully. It held in very well. And again, you know, we make 10-year investments. It's a 10-year life fund. I'm not trying to market time our purchases, but I can't take that macro hat off completely. And when I think there's a low in the space, I want to deploy a lot. And when I think that there's too much froth, what we tend to do is we just back off and pass. And last year we passed on over 100 deals. And that was largely because, you know, the valuations were so crazy, 50, 80 times revenue for some of these businesses in our space. But so I wouldn't say I was the only one, but that signal was pretty clear. And I thought, okay, everyone is panicking. And there are a lot of businesses that we really like. Of the 7 we bought, 4 were in the secondary. And so you have people, whether they're seed investors who just want liquidity or funds that invested in the space that are pulling out a little bit. We were able to buy in the secondary at a 50 to 80% discount from previous rounds. Now, just to be fair, some of those previous rounds were, hugely overextended. But still, good valuations, and I still see them. The market is still there for a lot of those ex-high flyers. And in the 3 deals that we led, there really wasn't that much competition, so we could set the price. And so I think, last year you had some of the very large private equity funds that came into the space, 21, 22, deployed big capital. And I think they're just used to buying sort of SaaS tech businesses, which you can put a very high multiple on. And I kept saying to my guys, but to some of them as well, the underlying asset in the crypto blockchain space is Bitcoin and Ethereum, and they have 100% volatility measurement. You can't value these like traditional tech companies. You're going to have 3 pretty massive bear phases over a 10-year period where the underlying asset goes down 80%. You have to have a bit of a defensive premium baked in there. And so we didn't really pay on the 26 businesses we've invested in, the 1.2 billion we've deployed over the last 2.5 years. We haven't paid more than really 10 to 12 times revenue when we entered them. And so that metric is just a metric that we use, and really, thankfully, saved us from making lots of mistakes last year. So I would just say that in the beginning part of the year, there were quite a few signs of, it's just overvaluation euphoria, and we pulled back. And then when I saw the markets were holding in well like that, I just thought, let's deploy the remainder of our fund 3. So it was a little bit of old time macro feel, a little bit of like, let's stick to our valuation metrics and process. So yeah, we were quite fortunate in that regard.
Yeah, I love it. And I still remember the conversation we had 17 months ago where you said, look, Brian, I'm not the guy that's going to get you 100x. I'm going to get you 10x, and I'm going to invest in companies with revenue. And you started listing the companies, Deribit, Ledger, Yuga Labs, Animoca, Kraken, Gemini, Nova Labs, formerly Helium, and it goes on and on. I mean, these are the best of the best in this space and real infrastructure plays. And it was not what people wanted to hear when Bitcoin hit its high in November, but then fast forward 18 months and you're looking like one of the savviest investors out there. And it's just really interesting because I still remember you saying that to me, like, I'm the one that's going for the 10x returns. And
well, 5 to 10x, 5 to 10x right, on the portfolio over a 10-year period. We have to, but it's definitely not a venture strategy, which I always say is make 10 investments, 9 go to 0, and one ends up being Google. But no, we certainly do. We look for, we are investing at the growth stage. We're looking to invest in companies that have, minimum sort of 30 to 50 million in revenue, businesses that, are going to be able to withstand the bear phase. And we had one last year. Of the 26 investments, we only had one that was impaired. And, it was only 2.5% of total assets. So it didn't really impair us. And that was partially, why I had the sort of wherewithal and comfort to be allocating in Q4, because we didn't really feel all that pain that was in the rest of the space. And certainly many of those liquid hedge funds that have to mark to market every month. I mean, I was in that business in the macro world for a long time. And, I lived through tremendous periods of pain. And I think the skill really is to get exposure to the space, to the growth and the overall value of the digital asset ecosystem, but without the volatility or, that other people are experiencing. And so Some people have said it's a sleep well at night strategy. Yeah, I mean, I do think the portfolio is going to make us 5 to 10x over that 10-year period. And we're not going to be the best performer in the space. But it's a bit strange. I still feel we're the only fund that I'm aware of that focuses, the only growth equity fund that focuses exclusively on blockchain and crypto businesses. So it gives us a little bit of an edge. We've sort of built our own ecosystem now. The companies that we're looking at for the fourth fund that I'm doing are going to be plugged into that ecosystem, and you can see what all the companies are on my website. I mean, they're all right there, and you're right. I mean, I feel like those are core companies to the ecosystem. We're going to come back 5 years; they're all going to be, still around and thriving. So.
It's wild because completely independently of our relationship inside my crypto and DeFi academy, like literally I just kicked off my class, my 4-week class, and they're buying Nano Ledger X's to set up their hot wallets. By module 4, they'll be buying a call option on Ethereum on Deribit. And it's just wild. I mean, we've had Yatsu from Animoca Brands on here. It's just wild how your investments are, yeah, they literally are key infrastructure in this entire ecosystem. And that's just me choosing the right things for my students to use, and it happened to be your investment. So I don't think there's a coincidence there. I think you looked at those things and chose, and like you said, you're the only one doing that in this space.
Well, I was, it's like a blue chip strategy in a way. I mean, the difference really is that I don't know. I seem to be the only guy out there who thinks that there are blue chips in the digital asset ecosystem. I mean, these are companies in some cases making hundreds of millions of dollars in revenue. A company like Animoca made more revenue in 22 than in 21. If you can, think about that for a second, you had a massive bear phase in the cryptocurrency markets, and here's a company that actually did better during the bear phase. And we have actually 5 or 6 companies that did better in 22 than 21. So that really helps a portfolio. Obviously, the exchanges were all marked down 30 to 40%, and in some cases more. But when you have a portfolio, I think that in a portfolio that's seeking to get exposure to the entire space, not the whole space is dictated by the price of Bitcoin and Ethereum. And I think if there's one important thing, and you noted before we were chatting that, yeah, I was just on another podcast, and if there's one thing that I am trying to do now is a little bit is change the narrative with people. In the US, the regulatory rhetoric has gotten very negative, but then all of a sudden in the UK and Hong Kong, Singapore, Dubai, Abu Dhabi, the interest has picked up. And, that Paris meet that we did was the end of a 1-month-long trip that I'd done. And, changing the narrative, really to let people know that there are a lot of things going on in this space. I call them sort of subsector activity. And that subsector activity did not exist at the end of the previous bear in 18, early 19. And what am I talking about? I'm talking about, there was no DeFi, 2.5, 3 years ago. Today, you've got 50 billion TVL or whatever the number is. Last year, you had $8 trillion of stable coins settled. Okay, that's in a bear phase. That hit an all-time high. 3 years ago, there were no stable coins. You've got a massive NFT market that, despite the ups and downs, I think is thriving, did not exist 3 years ago. And so when I say, when you mentioned earlier in the podcast, the 10 trillion and the 20 trillion number, that's 10 trillion is what I call would be the value of the digital asset ecosystem, which is the value of all the cryptocurrencies and all the equity in the space. And when I had the idea for my first 3 funds, 10T, that was about 300 billion. And today we're at 1.7 trillion. The high was 3.2 trillion. But just think, we're still up over, 5 times in 3 years. Like, how many people have assets in their portfolio, certainly that big, that go from 300 billion to 1.7 trillion. And I think it's bottomed out. And during the next bull phase, which I think to really pick up momentum in the second half of 24, 25, I think we're going to be punching up certainly over 5 trillion in terms of the total value. That idea for 10T was that we were going to hit 10 trillion in 10 years. And I just simply wanted to, you know, have that marked somewhere. So I put it in the name of my fund. I just, so that people wouldn't think that, you know, me calling for a 30x in the value of this ecosystem in 10 years, you know, is a bit nutty. I don't recall ever doing that myself in any other asset or asset class. But it just seemed sort of reasonable. But now as we get there are all these new areas that are growing up that I couldn't even imagine 3 years ago. I mean, look, you have a DeFi Academy that could never have existed, didn't exist 3-4 years ago. And so, you know, that's the difficult thing in this space, is to try to see beyond the outer perimeter. And we look to invest in CEOs that have the ability to pivot to that unknown. I think it's a very difficult thing, but you mentioned Animoca. I think someone like Yat has that ability. Pascal at Ledger, I think, has shown that ability. The twins at Gemini also, I mean, I think their purchase of Nifty Gateway was very prescient. I see that they're going to be doing some innovative things in the future as well. So, you know, we try to pick established companies that are making, you know, big chunks of revenue because they have the flexibility to take that risk and, you know, add that business line, buy that small company that could be building the future. And it's a future that we're not even really sure about. So it's a little bit tricky. You know, we have a pretty big venture, I would say, venture component embedded within these more established companies. And so we get a little bit of that extra venture kick, but I don't feel like we have the risk, you know, that having just straight out venture bets, you know, that you have.
And I think it's important that we change that narrative because, like you said, up until 18, 19, the only thing to talk about in crypto was probably the price of crypto. I mean, even back in 14, 15, 16, when I was interviewing people like Andreas Antonopoulos, the only thing that mattered was the price of Bitcoin. And everybody got conditioned to that. And I feel like a lot of the public is just like, oh, where's the price? And I feel like these days that is missing the point, because you said, I think you had a term where you said under the hood, there's a lot going on. And I was having this conversation with one of my students the other day. I said, look, the price of Bitcoin can stay the same for 2 years. And the companies that we're investing in are going to do incredible things. And again, we've just invested in a company called Vatum that's building metaverses for Fortune 100 companies, where a customer can go into a metaverse like Frito-Lay did for the FIFA World Cup, and they don't even know they're in a metaverse. They don't know they're connecting to a digital wallet. They're just having an amazing experience where they own things and they're in a social atmosphere. And they're building these things. Same with Orange Comet, is building metaverses for things like The Walking Dead and Scottie Pippen of the Bulls. And all these things are growing and building. And the price of Ethereum can stay the same. And they're still going to create, you know, hundreds of millions of dollars of value. And so, but you have to communicate that narrative, because I think the public, which maybe means your congressman, is still thinking it's about the price of a crypto asset.
And trading. And it's not just about trading. And, you know, they're like, oh, 32-year-old bros pumping and dumping tokens. And, you know, unfortunately, there are bad actors in the space. You know, we saw that with FTX. You know, the ICO boom and bust, there are many bad actors, people pushing those kinds of tokens on sort of unsuspecting people. I mean, it's unfortunate. You know, they're, you know, with creativity and entrepreneurial activity and sort of a open playing field, you're always going to get some bad actors. But what's incredible is that some of the regulators in the US are just hyper-focused on those handful of incidents rather than what's going on in this broader ecosystem. You know, some of the things you mentioned are spot on. I mean, Starbucks and Polygon relationship, I mean, that's incredible, right? Like the thing that, you know, I think we talked about a little bit, the California DMV using the Tezos blockchain.
Yeah, talk about that. Talk about that.
Well, it
'cause
was just,
you told me about this in Paris, and I was like,
yeah,
yeah.
I know. We did a little more digging. Look, it was an announcement. We think it's happening. Someone said to me, "Oh, Dan, that's fake news." And I'm like, no. My analyst and I, we dug into some fake news. They have partnered with a company that is going to put, California state licenses and title deeds to your car on this Tezos blockchain. And, we've dug a little more, not exactly sure specifically why Tezos, but there must be a specific reason that chain has, there's a specific use case. I mean, as you know, all these different chains are trying to optimize for different things. And I do think it's important to highlight to people listening that, look, Bitcoin and Ethereum are different in my mind than the other chains at this stage. They've reached network effect. Bitcoin is pure collateral, is unpenetrable. It is a security apparatus. I do think it is a store of value. It's been the greatest performing asset over the last 10, 12 years. Again, with a lot of volatility. I don't see that changing. And Ethereum, has been built for a little more flexibility and programmability. And, there's a huge programmer community now that's in the last 3 years come into the Ethereum ecosystem. And so, I think that there are many use cases there. Many of the NFTs are on top of Ethereum. And so I think those are proven use cases. And the other chains, it's a dog-eat-dog world out there. And the guys that can prove, their usefulness will survive. And 5, 10 years from now, we'll have established niches. I don't think we need to use Bitcoin for absolutely every single thing. You don't need, that being said, I mean, you have Lightning on top of Bitcoin, which is great for payments. And, they are adapting a little bit. But I kind of like the fact that Bitcoin is a sort of pure proof of work back, cryptocurrency, that the security of it is impenetrable, et cetera. But again, just to focus on that and to ignore all of these other developments. And I would say, what people are calling the Web 2 movement into Web 3, right? I mean, a lot of these traditional tech companies, corporations, they are trying to incorporate blockchain into their business models one way or another. You have even car companies, Fiat, for instance, what was the other Italian company that is putting all of their car parts on a blockchain? Maybe it was Alpha. I think it was Alfa Romeo. But anyway, the point is that 3 years ago, you had none of this, right? And so I'm this macro guy. I'm looking at things from 20,000 feet. That's just my background, and I just see so much improvement, like so much innovation. And then every single day, the traditional press is hammering the space. Today, Brian Armstrong said he would consider moving Coinbase out of the U.S. Like that, I mean, we only have 3 exchanges, right? We've got Kraken, Gemini, and Coinbase, and Coinbase is the only real crypto, blockchain business that's public. I mean, aside from Galaxy, which is a little smaller, but to think that we are going to push sort of the preeminent exchange, especially for retail, outside of the US. I mean, it's almost a horrifying thought.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.